Right, one of the top market stories right now, Nvidia under scrutiny, even as sales grew more than 200%. They promised they could do even better in the current quarter, and yet the stock is down about 4%. For some perspective, we've got Eric Jackson, founder and president of EMJ Capital, and Matt Bryson, senior vice president at Wedbush, who covers the stock, rates it a buy. Matt, is this just a classic sort of sell the news type of event, or was there a real blemish here that is cause for concern?
I don't think there's any significant cause for concern or anything we didn't really know. Yes, Nvidia told us that they weren't going to see the significant revenue from China in Q4, and there's some uncertainty around whether they'll be able to ship meaningful product into China moving forward. But beyond that, I mean, they continue to out-execute expectations.
Explain the China part of it, because obviously if they're saying we can still grow more than 200% with sales declining in China, I mean, they're having a good time elsewhere. Why is it so important, though, for them to maintain that market?
I think there's two things. One is that China was 20 to 25% of their shipments, so it's simply a large market. And so when you think about how much pent-up demand is out there, and there is significant pent-up demand. Lead times are still 200 days for their GPUs. That backlog is larger if you include China. And then from a longer-term perspective, China is, again, it's a quarter of, up to a quarter of potential TAM. And so when you think about where Nvidia might be in 2026, 2028, losing China certainly diminishes what their absolute revenues might be 4, 5, 6 years out, no matter how big AI gets.
It's growing at a rapid pace. Eric, you're no stranger to kind of these game-changing technologies, and you know the complaint is always it's gone too far, too fast, valuations. But how do you think about putting dollars to work in this sector that is just, you know, as many say, is just kind of getting going?
Well, I think if you are looking to invest in the Magnificent Seven, you know, you look around and you say, which of these names has the best upside? Who has the largest potential for growth from here over the next few years? And I think Nvidia is in a class by itself. You know, maybe Microsoft a little bit behind it. And so I think, you know, now if you believe that AI is going to be a mega trend that has years to play out, and Nvidia is in the driver's seat of benefiting from that shift. If you don't believe that, then you know you can put your money elsewhere. I do, clearly, and I think the biggest reason for the skepticism, I guess, if you want to call it that, this morning, in terms of like a modest pullback from the all-time highs, is just that I think a lot of investors have never seen growth at this scale for a company this large. We're talking about 100% growth year on year. We're talking about 300% growth year on year in the data center in the coming quarter. And I think there's just this natural skepticism, like, can this continue? Is this just another Cisco, like back in the dot-com days? Well, there's really nothing, you know, Cisco was nothing like Nvidia. You know, they were much smaller. Their growth rates were puny compared to Nvidia. So I think it's just so hard to wrap your head around that, you know, people think, like, is this as good as it gets, or can it get better? But we're clearly still at the beginning stages of scratching the surface on enterprises using AI to their benefits.
Well, Matt, can you answer that question? Is it as good as it gets? I mean, are they just pulling forward demand? How many years can they grow, you know, keep tripling their business?
So I think you can certainly make a cohesive argument that whenever you end up in periods where you have backlog, that at some point you are shipping above end demand because you're working through that backlog. It's just how product constraints work. Now, having said that, when you think about large language models changing how data centers are structured, you know, the argument that Jensen would make is that we're only at the very beginning of shifting data center infrastructure in data center software, where they're talking about $1 trillion market for software, and they're looking at an annualized run rate of $1 billion next quarter. And so that they have a ton of TAM to grow into. And I think AI will continue to grow at a substantial pace. That doesn't mean that you don't maybe see a pullback for a quarter or two, which is, I think is the fear. But I think there's a ton of room for growth over the next few years. It's not just Nvidia saying that. You had AMD make some pretty bullish projections about what they thought what the AI hardware market would be a few years out.
Does this quarter put to bed the notion, Matt, that Nvidia is too expensive? I mean, you're really only paying 40 times for a company whose bottom line is growing by triple digits and has a pathway to, at the very least, high double-digit growth.
Yeah, no, I mean, I think that it comes back to that the correlation with Cisco, right? One of the things that went wrong in the dot-com era was it wasn't just that growth expectations were too high, but you had these really high multiples attached to them. With Nvidia, if I look at my numbers, I think I'm taking a relatively conservative stance, and that gets me to roughly $24 in earnings, which I think is below most of my peers in 2026. I mean, Nvidia is only trading at 20 times that. It's not trading at this substantial growth multiple. And so to some extent, I think the stock is somewhat de-risked given how much their earnings have accelerated over the last 2 quarters.
And of course, though, when you see a market growing that fast, Eric, other people want to step in. Now, they can't do it as easily because of the technological innovation that is required, but they certainly are looking and they certainly are trying. Are you looking to widen out your bets when it comes to AI semiconductors? Are there others that could benefit from a catch-up?
I don't think so, Amber. NVIDIA is a 30-year-old company. And I think we underestimate just what a substantial lead they have. And not only that, keep in mind, I mean, they did something like $6 or $7 billion in free cash flow. They announced yesterday. I mean, a year ago, they were doing, like, in a good quarter, $1 billion in free cash flow. And so now we're talking about this sort of new era where, you know, they're going to be banking that kind of substantial free cash flow every quarter. And guess what they're going to do with it? I think they have a sizable lead. I think people make announcements all the time. It doesn't mean that they have a product that, you know, hyperscalers are going to want to use at scale. You know, Microsofts of the world can spend money on new chips, but how's that going to affect, you know, I don't know, the Salesforces of the world or just enterprises? It's NVIDIA's game, you know, it's, you know, to lose, and I don't see that happening. So I'm more concerned about, you know, can they scale up, you know, their supply? Can they deal with the China issues? Can they prove out the, you know, the different AI cases that get people really excited? Like, oh, I never knew that ChatGPT could be like this. Wow, I got to pay attention to this, rather than competition.